In February of 2022, Cathie Wood liquidated 37 million shares of Palantir, taking a $400 million loss in the position. She has now recently entered back into the stock. She sold it around $12. Her average was 21. She started entering the stock again when it was around the early 9s, late 9s, and then early 10s. She has not added since then. She currently has 5.3 million shares. One could argue at an average of like $9.80 to maybe $10.20. The stock is now at $14. It is $14 in the pre-market on May 30th at the time I'm recording this. We'll see where the stock goes from here, but Cathie Wood is back into Palantir. She doesn't have 37 million shares like she did have a year ago, but she is starting to have a substantial position. I wanted to go back and see if there was any footage of Cathie Wood talking explicitly about Palantir. Not just the AI market, not just technology in general, but rather more specifically about what thesis she had on Palantir. And I came across a video when Palantir was $29. Zoom was $427 at the time. And Cathie Wood had been buying it very high in the 20s, basically explaining her overarching thesis for why she is bullish on Palantir. It's a 2-minute and 50-second clip. Let's take a look at it. It's on CNBC. This is from 2 years ago, around February 18th, 2021. So really right when the bubble of 2021 was getting started. This is when Cathie Wood began speaking more publicly on Palantir. Let's listen to her thesis and try to analyze what has changed since then and also why she has come back in the stock. And real quick before we play the video, the reason this is so important is because Cathie Wood is a very big name. Ark Innovation is a very big name. And honestly, a lot of hedge fund managers and institutional investors follow Cathie Wood, whether we like it or not. And so as a result of that, her decisions do have influence on how Wall Street thinks about a stock.
Ask you about Palantir, which we just found out you've added to. Can you tell our viewers why you added rather significantly to your stake in Palantir?
Yes, they reported yesterday, and the stock was down on the report. It's interesting to listen to the
market cap here is at $48 billion, and that's when, again, she was buying a little bit more aggressively back in 2021.
CEO. He was speaking our language. He essentially said to investors, you know, we are playing in a massive space here, and we're going to invest aggressively now in order to capitalize on the exponential changes that are taking place here. So if you are short-term in your focus, you probably don't want to spend too much time investing in Palantir.
Now, this is correct. Alex Karp, the CEO of Palantir, has been saying for a very long time that there is a long-term horizon. The AI space, machine learning space, data analytics, enterprise software space is a very big space. Karp has acknowledged the TAM is about $900 billion, close to $1 trillion. And so this is the time for them to invest aggressively. Now, this was back when interest rates were zero in 2021. So obviously Karp's tune has fundamentally changed because the paradigm on which Wall Street actually values these companies is now about profitability, not just growth at all costs, because interest rates are higher. And the reason Palantir is having this sustained rally outside of, you know, the various external things that may be going on with technology and AI is they were profitable on a GAAP basis from operations, not just from an accounting basis, right? Like, which was the first quarter of GAAP profitability. The second quarter, which was the recent quarter, they became GAAP profitable consecutively, was actually money, $4 million from operations. So Wall Street said, hey, this is a business that has, you know, generated a tiny amount of profit, but it is a profit, and they're not just growth at all costs. They're trying to be more fiscally responsible here. At this time, it was just all growth when Cathie Wood was buying.
So that's music to our ears because and we do believe more and more companies are going to start behaving in this way instead of catering to short-term time horizons and we would say, in some cases, short-sighted shareholders who are much more interested in profits now, dividends now, share repurchases now, than they are in a company investing aggressively, foregoing short-term profitability in order to really catch some very big waves out there. So I'm astonished. Their revenues are still 61% government, but I've learned, and I think most people in the innovation space have learned over time, that some of the most important innovations in our lifetimes have started in the government, especially in the defense sector. And
now, as she's saying this is where the thesis became very confusing for why they sold, because ultimately Brett Winton, the chief futurist of ARK, said that they were too reliant on the government and that commercial needed to grow better. He didn't think that the government procurement for contracts that Palantir would be able to get would be as elusive anymore. They were going to become more multi-vendor versus unilaterally vending, which would mean Palantir would have to split contracts with other vendors. So they basically said the government focus was too high when they sold, and that was a year after they started buying it. And that was very confusing to me because you got ARK basically saying, and this is where the thesis on Palantir and Cathie Wood becomes so confusing, because she's saying a lot of that government growth ultimately trickles down to commercial, which is what we're seeing happen right now. We're seeing a lot of the growth in Palantir's commercial enterprises is happening because of all the innovation they were able to do, subsidized by practicing, failing, and ultimately succeeded on the government side. And eventually commercial was always going to grow. I mean, if you're a Palantir investor, you always thought the bull case was that this software could be in every single vertical of every single industry in the entire world. And so for them not to just give it that time and let it grow, but for them to immediately sell as soon as they see a little bit government slowdown, that was always confusing. And again, look, they got to sell. It's an actively managed fund, but where are you putting that money if you're selling? And if you're putting that money into, Zoom or Roku, one would argue that it's just not as innovative if you're an innovation fund than Palantir.
And in the intelligence sector. So we think in many ways, and they won't talk about how, but they're certainly garnering a lot of business, which tells us that they are seeing in the future and investing in the future in ways that companies, governments, but increasingly companies are going to need, especially as we're competing against China. I think we've been, again, with this short-term time horizon, we have not been spending enough in innovation. And so, Palantir's attitude is refreshing. It's exactly how we invest. We want our companies to invest aggressively. We don't want profits now. We want them to invest aggressively because we're moving into many winner-take-most markets. And the autonomous taxi world is a very good example of that. That is why our confidence in Tesla, going back to the largest position in our portfolio, is so high.
Now, this is very interesting because as she says, it's a winner-take-all market. This is what we're hearing from Karp. So she said two things at the end that I thought were important. Number one, it's a winner-take-all market. What does Karp say about his pricing strategy when it comes to artificial intelligence? We have no pricing strategy. Our goal is to just take the whole market. When he says that, some investors may think, oh, you don't have a clue about what you're doing. Other investors may say, you know exactly what you're doing, which is you don't need to give us this detailed financial analysis on how you plan to price your offering. I want you to just be a dog and go get it. Go get the whole thing, and then you'll figure that stuff out later, right? Because the byproduct of getting the whole thing, or at least, being one of the 5 to 10 companies in the next decade that ends up getting a piece of that pie is a crap ton of money. And so I would rather have that attitude for my CEO in terms of just going out there and trying to be able to capture the market, which is what Cathie Wood said that Palantir should be able to do when it comes to the AI space. The second thing she was talking about is China. And we're seeing that now. Again, I don't want to bring this up just to bring it up, but what we saw with Russia and Ukraine makes it very likely that we would see something similar with China and Taiwan. And everyone should watch the CBS 60 Minutes, it's on YouTube, interview with the president of Taiwan, basically saying it's not a question of if, it's a question of when China invades. And so if you got the people of Taiwan saying, hey, we know what's going on here, we know this is going to happen, who are we as people in the West to be able to be, oh, that would never happen? It's no, that could happen. And if that does happen, what implications does that have overall for how Palantir would play a role in it, but overall for our entire economy? And so I think those are two things that she talked about that were interesting. Now, the reason she sold out of it was because of this governmental growth stuff, which never made any sense to me, because in that clip, you've got all these arguments, whether it's China, whether it's AI, whether it's a market that's growing exponentially, whether it's investing now to be aggressive later, or being aggressive now to eventually have dividends pay out in the future later. All of this was kind of exactly what, as a Palantir investor, you want to hear. And maybe it made more sense to double down on that position at $6, $7 and really, establish a substantial corner mark of your portfolio being AI versus sell it off for some of the other plays that she had. The other reason this makes me very, interested in just how Cathie thinks about it, and I'm happy she's back in the stock, but I think it's important to analyze, what one of the biggest institutional investors in the world buying your company means, is how they think about NVIDIA. So NVIDIA is now at $400 pre-market at the time I'm recording this, and Cathie is justifying selling it off. So Brett Winton, again, chief futurist, says, companies are dumping tens of $billions into AI chip investments implies that they are anticipating hundreds of billions in AI software revenue. Seems like a lot. Until you consider a knowledge work of a wage bill of $30 trillion and the productivity potential of these software advances, which is, so basically saying there's a strong AI market for, knowledge work, which means AI software can increase. $40 billion of NVIDIA AI-driven data center revenue implies an anticipated $350 billion to $700 billion in AI software revenue in the next few years. 2022 software market as a whole was $800 billion, basically saying that NVIDIA claiming they're going to be getting all this revenue from data centers would mean that there is software in order to produce that data center revenue, right? You can't get money from a data center unless there is software that is using those data centers to be able to train their softwares. His argument is the demand for picks and shovels implies but does not guarantee abundant gold. Software companies designed to 80% gross margin, roughly half of cost of revenues compute infrastructure. Per Gartner, compute and network make up 60% of data spend. Let's call it 2/3 for AI cases. Annual cost of operating these systems at 50% utilization is 40% upfront cost. For AI kit that flows through last providers that have to mark up by their gross margin, call it 50%, say half of NVIDIA kit goes to those last providers. How much of this AI data center spend is for inference versus training? Are companies designing to annual inference costs higher or lower than upfront cost to train? $40 billion of AI compute and storage capex implies $60 billion of total AI data center capex, which amortizes $24 billion of costs, of which half is in last providers. So layering in their margins, we get $36 billion in costs. If that represents half of software costs of revenue at 80% margin, it implies $360 billion in anticipated revenue to justify the investment. Again, that's not going to be the $350 to $700 billion in AI software revenue over the next few years. That would imply the $40 billion of AI data center revenue NVIDIA is anticipating. So they do this type of mathematical analysis to try to justify that investing in hardware chip companies doesn't make any sense because the AI software revenue that would be coming from the overall hardware that you're essentially investing in, the data centers, is not going to happen. That market's just not big enough. And then Cathie Wood says, in 2014, most investors considered NVIDIA priced at $5 simply a PC gaming chip stock. In contrast, ARK Invest First Principles research pointed to NVIDIA as the premier equity play on AI. Now up 80-fold, investors seem to think NVIDIA is the only AI play. It is not. What Cathie Wood is trying to imply here is, if you do all that mathematical analysis, the conclusion is that there is going to be other AI plays in the software space, not in the data center space, because investing in NVIDIA is kind of investing in the picks and shovels for the entire AI industry. That's why the market is giving it the massive premium that it has. Cathie's saying, look, no, it's run up 80-fold, 80x from its 2014 price, but there are many other interesting AI plays that are going to be able to capture a lot of the market from a software perspective outside of just investing in the data center revenue. And the software market isn't even as big as the data center revenue, which is the premium that you're getting on NVIDIA, would imply. The problem with all of this analysis, I went through all of that to say this: you still sold it at a very cheap price. So this is the issue, right? We have this tweet right here. This is where Cathie sold NVIDIA ARKs. She owned 800,000 shares of NVIDIA and ARK before selling it at the bottom, literally in November per BPG, causing investors to lose over $200 million in potential profits. I think she sold around 150-ish, 140-ish, and obviously the stock has run up here. Now, so the question becomes, is her analysis making any sense? And the reason I wanted to do this comparison is because why did she sell out of Palantir? Well, the government revenue was too high, right? Or which too much of a percentage of overall revenues. Government revenue or government procurement was decreasing in their eyes, so the entire thesis was broken. I mean, 37 million shares gone like that because one part of how the government business operated destroyed the thesis, even though you said 2 years ago, which is why I played this clip, that the government business is what trickles down to the commercial business because they're able to test all their stuff here and then bring it into actual enterprises after using it with, you know, the highest sectors of our entire country, which is like the United States military, army, DoD, etc., which is a great use case. And then on NVIDIA, you're making this next argument where you already said that this is an important picks and shovels play, but it's not important enough to justify the premium you're giving because of whatever mathematical analysis you've done. And therefore, let's sell it off at literally bottoms because it's not innovative enough. Back in November 2022, Roku, Zoom, and Coinbase are more innovative. This is the overarching problem that I have with Cathie Wood's thesis on how she buys and sells, and why I wanted to look back on her Palantir thesis, because her Palantir thesis made a lot of sense until you liquidate and just go against the entire thesis. NVIDIA thesis makes a lot of sense until you go against that thesis because you believe there are better opportunities, which is exactly why she sold Palantir. There were better opportunities. What opportunities is she talking about? Roku is not the better opportunity. It's just not. Maybe Tesla is, but Tesla's a lot more pricier compared to both NVIDIA at that time and Palantir at that time. It's just a little bit more of a pricier company. And if you assume autonomous robots and self-driving vehicles becomes a thing in the next 5 years, maybe it's not pricey, but the jury is still out on that. I mean, that's much more of a riskier bet than keeping your money in NVIDIA, where they basically have a monopoly on chips, or keeping your money in Palantir and doubling down, where the market cap got really disrespectful over the past couple months, really the past year, and now it's starting to kind of grow into what the valuation could become. And so overall, the reason I wanted to bring this up is because I don't think Cathie Wood has the best thesis for investing and buying AI companies. And you know, I'm happy she's back in the stock for Palantir, but what she's done with NVIDIA and how she has flip-flopped behind her thesis, it makes me wonder if she would just sell off Palantir again if she thinks one part of her thesis is incorrect. The final part to this is maybe she thinks, you know, the reason NVIDIA is not the best play is because there's other AI software plays, and maybe the answer to that is Palantir, which is why she's going to even double down more at Palantir at the prices we are right now, because she sees that as a better software play, which just begs the question of why it took you 2 years to come to that conclusion when you already had that conclusion 2 years ago. People will say it's an actively managed fund. She had to sell out of it to buy other positions. My question will always be, what are those other positions that were much more innovative than buying the dip on a company that obviously you thought could become the thing that it could become? So those are my thoughts. At the end of the day, this is what Cathie Wood thought about Palantir a long time ago, how she also thinks about NVIDIA and her thesis on AI. I like ARK's analysis on where AI could go as a market. I don't necessarily like how they have played that market over the past couple of years, because if they had just stayed with some of their theses and not sold and kept their 5-year horizon, investors would probably make a lot more money investing in ARK innovation. Let me know your thoughts. I'm happy Cathie's back in the stock, but let's see how long she lasts and what she thinks overall about the AI markets as we go forward. Thanks so much for listening and watching. I will see you in the next one.